On February 28th, the U.S. stock market made a strong recovery to finish the month following a few tough weeks. Let's take a look at how the main indexes performed. First up, we saw the S&P 500 climb 1.6%, closing at about 5,954 points. And the Dow Jones also rose by 1.4%, ending about an estimate at 43,840 points. And the Nasdaq gained about 1.6%, closing at an estimate 18,847 points. Pretty solid numbers after a rough start to the month. So, what causes rally? It's all about inflation. The Personal Consumption Expenditure (PCE) index for January came in at 2.5% year-over-year increase, which was slightly below expectation. For investors, that's a good sign. It means inflation might be slowing down. What does that mean? Well, lower inflation means the Federal Reserve might hold off on aggressive interest rate hikes, which has a big concern in the markets lately. But hey, let's be real. February wasn't all smooth sailing. Despite the positive end to the month, it has been a really tough one for the tough sectors. The Nasdaq dropped about 4% overall, marking it's the worst month since April 2024. Nvidia, for example, had a roller coaster week with huge losses early on, but managed to bounce back on the 28th. And Tesla, after 6 days of losses, it rose by 3.9% on February 28th. But even with that gain, it's still 40% below its 52-week high. Now, here's where things get interesting. President Trump made headlines by confirming tariffs on imports from Canada, Mexico, and China. This raised concerns, especially in the tech sector, which is highly sensitive to international trade policies. Investors are worried that these tariff decisions could mess with supply chains and hit corporate profits, particularly for companies that rely on global markets.